Welcome to Investors Insights. Our topic today is good news, bad news. I'm excited today to be joined by my colleagues Trey Booth and Ty Miller. And we're addressing the old saying is, I've got some good news and I've got some bad news. How many times have you heard that? In addition to that, I also have people calling me going, Greg, this doesn't make sense. This market, we get good news and all of a sudden the market reacts negative. We get bad news and the market reacts positive. We're going to try and explain that to you today. So I'm going to start off with Trey. I'm going to ask you to start just to address good news, bad news.
Yeah, absolutely. Thanks, Greg. Yeah, so on Friday, we got the jobs data out, and this is a quintessential example of where good news turned out to be bad news. So the jobs report showed that 263,000 jobs were added last month. That's good news. The unemployment rate dropped to 3.5%. Again, good news. The small bit of bad news was the participation rate fell to 62.3%, but that really was a nominal number. And so how did the market take that good news? Well, it fell quickly 2.8% on Friday. And so what that tells us is that the market is no longer pricing in a high chance of what's called a soft landing. What that means, that's where the Fed is raising rates to slow the economy, but the economy doesn't slow to a point where it hits recession. And so you have a very, very nice, calm, reasonable slowdown in the economy and inflation, but then no recession. What we're seeing when we saw the good news cause the market to sell off is that the market is telling us that soft landing is unlikely. And so good news means that the Fed's going to have to get more aggressive with tightening and likely pushing the economy into recession. So we continue to see good news out of the labor market, which caused the equity market to sell off. And so we're kind of in that good news is bad news is good news reverse thing where everyone's watching the Fed again. We've been watching that all year, but that data point was very telling to us. Then looking forward to this week, we have probably what everyone's looking for, the inflation data. On Thursday, we get the CPI comes out, and expectations are for an 8% clip. Last month, we got 8.3%. It was higher than expectations. We saw, again, the market really sell off. Inflation came down, but not at the pace we expected. So we really need to see the inflation number come down. Hopefully, we're going to get a below 8 number because then that's really what the Fed is watching. The Fed is fighting inflation. The Federal Reserve needs to get interest rates to a point where inflation is coming down. And hopefully we don't kill the jobs market in the meantime. But that appears to be what the market is hoping for is slower economy, lower inflation, and maybe the Fed has done its job.
And you're absolutely right, Trey. And there's a lot of moving parts here that we're watching closely. Also, as we continue to march toward the midterm elections, just to see what happens after that. So all these issues combined, we're watching closely. Ty, you brought good news and gave some good insight. Talk about that in relation to what Trey just shared with us.
Yeah, hopefully good news actually does mean good news as we kick off earnings season later this week. We're expecting sales growth for the S&P 500 around the 9 to almost 10% range and earnings around the 4% range. A little caveat there is energy is supposed to be the outstanding performer of this. But the good news is, that means lower expectations for the rest of the market. If we get some upside surprises, the banks kick off this week, with interest rates up like they are, the banks might have a good quarter. That could be a positive momentum for the market, kind of take some pressure off of all the other headlines out there and kind of, hitting on energy, good news, bad news kind of situation. OPEC last week, they were expected to cut 1 million barrels of production a day. They actually did 2 million barrels of production a day.
Right.
So, it's good news for the energy sector, but, it could be bad news for the consumer here. We'll have to see how the U.S. responds and where gas prices lead after having nearly 2 months straight of downward gas prices. We've kind of flattened out, maybe even ticked up a little bit. So that'll be interesting to see how that progresses.
Yeah, we're at some pivotal points here. Just being honest and good news, bad news. We're going to work our way through it, and it's not going to be dull. So stay with us, and we're going to continue to keep you updated on Facebook and Twitter and LinkedIn, on our podcast and on our YouTube channel. We're going to keep you informed. Also want to encourage you just to go back and watch some of our previous vlogs because of the fact you will see a trend of information and data and things that we're tracking. And this way it helps you when you are hearing about the market or looking at your phone or on your computer. you know that we're watching things, and these are points that we're looking at. So as the news comes across, wait, they mentioned that in their blog on Monday, or they brought it up in their social media earlier in the week. We will keep you updated. We appreciate you forwarding this blog to friends and family and colleagues. That has been huge for us in this 2022 year as we've met new people and had new opportunities to share about Five Plan Partners, where every day we come in here striving to make our clients' lives better, richer, fuller. We thank you. Have a great week.